Hey everyone, welcome back to Fiscal Voyage. My name is Felix, and today we're going to cover a stock that's becoming undervalued and is a high quality stock. And in this video, we're going to be covering Starbucks. Starbucks, I'm pretty sure you guys are pretty familiar with Starbucks. Probably most of you use Starbucks for your coffee drink in the morning. But anyway, if we go to the fast graph here on Starbucks, you can see right now the price is at $90.12. Currently has a blended PE of 23.8, which I think is pretty high, and I'll explain later why I think is pretty high still. But based on a long-term aspect here on the fast graph, it does look undervalued based on its normal PE of 31, but I think it's pretty high, and I explain later on. It has a dividend yield of 2.53, which is pretty good. I like 3% or higher, but 2.53 with the growth rate that it has on the past years of dividend increases has been good. And an S&P credit rate of BBB plus. If we look actually at the past performance on the dividend growth, you can see here the previous dividend growth was 8%. And 8% in 2022 and 9% in 2021, and it was before that it was doing high double digit over 20% every year. So that's been amazing dividend growth. If you were lucky enough to purchase Starbucks in in the early 2010, 2012, 2013, your yield will be extremely high. You can see here your yield if you owned it at 2012, it would be over 30% right now, so that'd be great if you owned it. But we're talking about now, what we're getting now in today's price. So I want to cover first off the past 9 years or more or less 7 years of data, because a lot of times with fast graph, the longer the data, right? Because companies, for the most part, when they starting out, they grow much faster as they become more mature. So we lower this to 9 years. Here you can see here it drops to 11.53, and the normal average should be around 15 PE. I like to buy companies under 15 PE or lower than 15. That's just one matrix I like to use, and I like it under 15, but high quality company I would pay for 17, 18, 19, depending on the future growth rate, because and this is why I think right now is a good time but not a great time to be buying Starbucks. So if we look at the based on normal P of 29, it does have good return, 27% annually for the next 2-3 years. For Starbucks, if it returned back to its normal PE of 29. However, I think it will go a little lower, and I'm going to use some technical analysis on that later in this video so you can see why. I think it has room to $70 to $80, and that's where I'm going to start picking up shares. So you can see here, if it gets to 15, and then from here go back to its normal PE, that's when you make great money. Even though you still make great money, it returns to 29 PE. And if we go look at the Starbucks valuation here on Morningstar, you can see here it is undervalued based on the 5-year average. You can see price to earning here is a little different, 24.10 versus the 34.29 on the 5-year average. Cash flow is good. It's still under and I like to use this to make sure the current valuation is always under the 5-year average when I'm evaluating the valuation of a company before I pull the trigger and buy. Also, if you see here the financial health, interest coverage excellent, 11.1. Current ratio could get better. I like it at 1 or higher, but this is decent enough, and not debt to equity ratio. And if we go to operating performance, you can see here net margin actually has been increasing. The trailing 12 months is 11.7 versus the 5-year average of 10.7. So it increased over I think 100 basis points, so that's great. Operating margin is increased also from 13 to 15, and gross margin from 26 to 27. So they're becoming more profitable than the past 5-year average. So that's excellent. So they're cutting costs, being more efficient and things like that. So that's great. And if we look here back to fast graph and go to free cash flow, you can see here free cash flow covers the dividend nicely. It's about what, 80% in dividend payout ratio, more or less. It looks like about 80%, which is good for free cash flow. I like always get this lower percentage to be better. The next thing I'm gonna look at is Yahoo, and in Yahoo, let me go to external links here. And Yahoo is expecting a 16% earnings growth over the next 5 years, which is excellent. And that's what I like to see. Future expectation of earnings growth is in the positive digit, 5, 6%, 8%, 10%. The higher the better for the 5-year growth. And then now let's look at some fair valuation price target that these analysts have. So in Yahoo, they have an average analyst price of $106.73 versus the current $90.12, which is really good. You're buying the company right now at a good valuation, but I think it could go lower, and I'll show you why in the technical aspect of it. So if we go to other analysts, consensus has it as a buy with a price target of 106.73. So if we go back to Yahoo, you can see it's basically the same price. Also, if we go to tip ranks ratings, a lot of these analysts also have a buy rating, moderate buy at 107.58 cents, which is the price target. And Morningstar has a fair value at $105 and gives it a 3-star rating. So now we're gonna look at the technical aspect of Starbucks, and I have to explain why I think it go lower. So over here on this side of the chart, we have the 3 months chart, the 1 month chart, and the weekly chart. I use this, and this one here is the daily chart. I use this for my long-term view of the any particular stock. You always use the charts to get a better price and feel of what's the price action going on here. So if I increase the weekly chart, you can see here the Starbucks basically is breaking this bear flag here. You can see here it's kind of like a wedge. If we make a line here, there's a sharp wedge, and it broke it and actually retested there. Right here, if we zoom in, you see it broke it and then retested. So the next level of support is going to be this bar here, which is around $89.20. 89.20, which I think it'll break it because it was forming this bear flag. And in actuality, this is where I will be interested in buying Starbucks. It's in this under $85, maybe even $86, $86 to $82. This is great buying opportunity here. Now, if it breaks this, the next level support is in the low $70, and that's where I'll be loading up a lot more Starbucks if it gets to this level here. So you can see here, this is why I think Starbucks will get lower. Now, the price right now $90, as we saw, a lot of company analysts has the company as a fair value around 105, 107, 102 in this range here. So you have, safety, right? But to me, it's not enough. I want it around the $85 to $80 range here. This is where I'll start buying shares myself. I actually owned Starbucks years ago, and I sold it around here when it had this run up. It was a good thing. I mean, it ran up higher, but then I didn't buy in this chance here. There was a good opportunity to buy more shares here as it bounced off the support here. You can see here around that $70. This is a great opportunity to buy shares of Starbucks around here in June of 2022. But I did take advantage of other stocks during the 2022 market correction, and now I'm building up cash and just slowly buying back stocks. And Starbucks is definitely going to be one of them once it gets to this $85 to $80. $85, I'll not go all in, maybe buy 20% of my full position size, and then here is where I most likely go full position. And if it goes lower than that, over here the 56 to $52 range with COVID lows is where I load up and just hold it forever, because this would be great valuation. You can see here, if we go back to this and look at the monthly chart, you can see here there's great support here and here around that $50 range. So this $50, and you got the monthly moving average here. And this is another reason why I think it'll go lower, because all the moving average, this is the 50 and the 55 moving average with the 13 moving average. The price is currently under the moving average. So whenever it's under the moving average, it means this is going lower. And if it's above the moving average, it should continue to go higher. As we saw here, it's above the moving averages, it goes here. You see it's above the moving average, it rises the moving averages. It's above it here. Even COVID, yeah, it went lower, but it closed above it, right? So it's just kind of like a shakeout. Here it went lower, but then it recovered and went back up above the moving average. So this is why I think Starbucks could go around $80, and then if it breaks this support area, head to $70. And this is where I really would like to buy more shares of Starbucks. So I hope you guys enjoyed this video. Let me know in the comments, what stock would you like me to analyze. Make sure to hit the like button and subscribe to the channel if you're new. And yeah, I'll see you guys to the next one. Take care.